The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. And, of course, market days, that is. Today being the very first day of October, November, December. 3 months to go, and it's all over. The years fly by. We're looking at some buying by fund managers, and you can believe it because for the past 2-3 days, those moments when I have tried to listen to any of the fund managers who I do respect. Bill Miller was on this morning. I did get a couple of snippets, and he's buying. And, you know, the people who have fundamental analysis and look at specific stocks, specific areas, and specific criteria that they've used for 15, 20 years or more, they're in the game for a long time, and they're able to get into a position. Normally, they will not have a stop in place because they would be, if once the homework has been done to buy, like any of the major mutual funds like Fidelity and the others, then every big sell-off is a buying opportunity. Why? Because the outlook is, based on their criteria, and usually it's fundamental criteria to be able to do this, that particular stock that they're looking at has, whether it's price to earnings, whether it's the dividend, whatever it is, it has the criteria that meets their longer-term goals. So that's one of the, especially when the market has been so strong for so long. So I'm going to try to delve into some of that as we move along today. I have a quick question here. First of all, I've got the E-minis here going to leg D in the 120-minute chart after the drubbing that the E-minis have had since the 1697.50 top of the 26th, let alone the 17, what was that, 1782? Sorry, it was 1726, 1726 high. This is, in fact, a welcome relief. It's fascinating because here it is, all those headlines, Boston Globe. Ever since this guy from the Red Sox took it over, it's changed in very subtle ways, but not too subtle to me. But I think for most people, it's got these headlines, it's 1-inch headlines, very big, and it says shut down. I think it says shut down today or something like that. Big bold letters. So big, so it's shut down. The Dow's up 64 at 15,193. The S&P is stronger, up 0.68% rather than 0.43% at 1693. The IWM. So let me just quickly, while I've got the chart, because I'm about to change it. Here's the E-mini. A long-legged doji says that somehow or other, the 1674 level, it's trading at 1686, will be touched as either an arch formation is made or just a quick jab down and then a spike up, or if it goes there and then closes into the E-minis 1670 area, then be careful. Why? Because the low of yesterday at 1666.75 will become a target. Now that will make the arch formation. In the meantime, very nice action. The VIX is down at 15.76, down 84. Now, we're still maintaining our positions, the short position side, unless taken out. Fine, that's the way it is. That's number one. Number two is I've been wanting to add longs. We have one long position today that's up. How much is that up? Because it's really interesting on a day like this. One long position is up almost 5%. So it really is stock specific. It is the way you handle the trades. I think that we're into a very volatile period. Let's just quickly look at this because the E-mini's made a peak D with a long-legged doji, so you can retest it just briefly the next day. And It's 1726.75 in the daily. Leg D up, broken the arch formation so far. I'm just going to extend it now. Where to this area right here. This whole area. Let's see. I'm going to make it between 1689 and 1672, somewhere around there. There should be a lot of resistance. A little uncertainty comes into the market. You have got your leg D. Leg D can continue in the Chapman wave. Okay, now let's take this away. That's the 120-minute chart. Now let's look at the IWM, because the IWM has been on a tear and has broken to leg C. Now this is very interesting because it's showing internal strength in the small caps. Now wait a minute. This is the IWM. It's the Russell iShares 2000 ETF. But let me just check the NDX 100, because I think it was slightly different. NDX, yeah, has made a peak D. This is about to go to 3248.52. 3247.13. And it's got that. You remember this pattern that I always look at, the falling axe pattern, this low series of expanding lower lows and lower highs to make a wedge formation that breaks out on the upside. So that would be E in the weekly if it goes above that peak D, and E in the daily, and leg E in the NASDAQ monthly. But here's something very interesting. Look at the IWB. And I don't know if anybody ever talks about the IWB. It's the iShares Russell 1000 ETF. They made a peak D at 96.97. Pull back. Nice strong candle today with a doji candle. A little bit of a long-legged doji candle in the weekly chart. So this has to be monitored quite closely. But even more significant is that if I'm looking at I wanted to look at the IYC. I don't think I've updated yes, I did. The IYC, which is the iShares Dow Jones U.S. Consumer Cyclical Sector Trust, is having a nice bounce. You have to call it a bounce. Now let's talk chart patterns, because let me just finish first. You've got GCZ, the gold. I just have not found any interest in gold at all. Oh, down 39.70. This is leg E to the downside, making that cup formation that I looked at in the weekly chart. I still believe I can draw this in, that there'll be another cup formation. And all that's happening in gold is it's making an H that goes to an M pattern, I believe. Now let's look at the dollar. There should be a relationship. There wasn't earlier this morning, and now the dollar's trying to come off the bottom. Not a great stochastic. It's at 17%. It's not a good pattern. Neither is the MACD in the daily, and the weekly has this big arch formation which says, hey, this is really critical. This is leg D to the downside. Leg D is where you should get some kind of a bounce. So I'm going to be watching the dollar closely, but for the month of September, it closed below the up channel support. The up track, the Chapman wave inside track support. That to me is very important, because it's saying that the dollar thus far is still seeing, you're still seeing the pressure from the government, bang, 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 knocking it down. Let's just go to the MDY quickly. That's the mid caps. I haven't used to have this all done. Let's just look at it. A, B, C, leg D in the monthly, brand new leg A, B, maybe C in the weekly. I don't want to do this too quickly. I've got to go all the way to the bottom. Hey, I'll do I'll do it during the break. We'll look at I was asked about the MDY. MDY is in leg A. It's the same as the Russell 2000, A, B, and it's about to try to make leg C to the upside. So this is just saying, government shutdown, ho-hum. Yeah, it affects some people, and obviously we all feel bad for them. But at the same time, in the greater scheme of things, to have 1 million people having a delay, it's just a delay in their payments, and that can be awfully awkward, but it is a delay. You will get the money, so that's very different to losing jobs. So I need to say that. Now, just one quick thing, and we're going to go to this is the TLT. How come the TLT, with all this uncertainty, is holding well, but it hasn't really broken down or broken out? This is the Lehman 20-year Treasury Bond Fund. It's leg B, possibly peak B in the and H goes to an M pattern in the weekly chart. So I'm watching these things. We're going to go through a lot of them later on. I would not be surprised if there are sudden little drops to the downside and then attempts to go higher. It's going to be a real news-related session. Let's go to Portland. This is Portland, Oregon, I believe. Am I in Portland, Oregon? Is that Bill? Hi, Bill.
I talked to you about at the end of your show yesterday about FAX, the Australian bond fund.
Right.
And you had some interesting information for me that you had known kind of the founder of the fund, I guess. And,
yeah. He was, as I say, he was one of my best friends in high school, and he was also he was the best man at our wedding, and and I remember when he emigrated to Australia from South Africa, he worked for brokerage organizations in Johannesburg. He had actually worked for a brokerage fund, one of the first funds in South Africa. You remember they just started funds, and he went to Australia. And the next thing is he started a fund in Sydney with his cousin, and was highly successful. He used to come here quite often. And one time he came to visit me in Boston. He was in Connecticut on business, and he slipped down to Boston, and we spent some time together. It was funny because what happened is this limo comes and drives up the driveway and then parks there, and the guy standing around, my friend Brian, comes out, and it just so happened that my son, who was at college at the time, was home. And then my daughter came back from high school just down the street, and then she came up, and both of them are looking around. What's with this limo out in my dad's house, all that stuff. That was Brian, and he was, in fact, in that very time, selling FAX, but it was a little different in the fund of the makeup. And I used to treat it, later on in years, I treated it as a counter trend because it was using the yields of the Asian markets as a part of their portfolio, and for some reason, for a very long time, it used to work absolutely inversely. It was like a mirror image to the dollar. And when the dollar went stronger, this went weaker. When dollar was weaker, this went stronger. So I remember it very well. I never actually ever, I don't think maybe in our newsletter, I think once or twice we got into FAX. And one of the things that it's done, it's gone all the way, considering that it's a bond fund, and it's a bond fund that is in Australia itself, and then it was sold to the Aberdeen set of funds. It had gone up to $8 back in $8.01 back in late 2012, and then it plummeted. And for something like this, when you're looking at yield, to go from $8 to $5.82, that is a huge loss in capital if you were wanting to get dividends. So I'm going to treat it in that light, and as soon as we get back, I'm going to talk about it. It's got a nice move today. You've got a fabulous entry point. We'll talk about that. Now I got a little time to talk about it because it's acting very well. FAX is at 6.13, up 0.7. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Dow's up 65, S&P's up 12. Big difference there. Disparity 0.43% for the Dow and 0.73% for the S&P. The S&P being 500 stocks, that's a much better signal. We're going back to Bill in Portland. So, Bill, one of our members of the Den, Pete D, he's called, mentioned that the facts trades with Aussie dollar. No, I never ever thought of that. I don't know why I never thought of it. It's the most obvious thing I should have thought of. Yep, look at this. It trades nicely, and the Aussie dollar's had a very nice bounce. It's actually leg B in the weekly chart. I like the weekly chart. If I can just go to the different time frame, let me go to the weekly chart here. Yeah, the technicals are improving. The monthly chart leaves a lot to decide. It looks like 0.9521. Now, I don't know if do you ever track, are you able to track the Aussie dollar and the United States, the currency pair, AUD, USD, or not?
I look at it occasionally. I just remember being over in Australia when their dollar was worth 50 cents, and now it's pretty close to parity.
I know my brother's very upset. He lives in Sydney, Australia. He's a city planner, and he gets upset when he sees that for the money that he ever left here. So this is what I'm looking at in the in the FAX, I think that's a really nice movement. And yes, it seems to be, not exactly, but very nicely copying the AUD USD, that's the Aussie dollar currency pair. But the most important thing that I want to see, and I want you to be aware of, is that in FAX, you need to see it pretty soon take out 620. That's the high that was made at that peak B in the daily chart on the 18th of September. The moment it does that, then I'm going to advise you to do two things, especially since you're treating it as a dividend stock or as a capital gain, or hopefully both, or what?
I'd like to have it as a dividend stock, but it swings around obviously quite a bit.
Well, that's
so
what
it's a little scary, especially they've had some extreme down.
Horrible.
Several times. In that flash crash, it went down to 2.5. So I don't know if you advocate doing this, but I've kind of had what I call a little trolling line in the water. I have a couple, limit buys way out of the market, just in case I would ever have one of those again.
Okay, now we're getting to something else completely different, and I'm so pleased you actually brought that up. I do have a bunch of callers online waiting, but I do want to get to this point, and the point is that you have a plan. And you've had have a plan that's based on your experience, because you've obviously been through some of this before with other stocks like it. Now this is what I'm going to recommend. Based on the criteria that you've just mentioned to me, because the monthly chart really doesn't look that good, I would suggest that I don't want to change your methodology. I'm just going to suggest two things. One is that on the position that you have right now, I would also consider that if it was to break under $6, and these things move really quickly, that the position that you just bought, that needs to absolutely to hold the last major low that was formed, and that was at $5.82. Sounds like far away, like a 582 price when you've got a stock trading at 613. But these things move very quickly. I love the action today, but the day is young. It hasn't closed. I will love the action even more if it breaks above 616. That was the high of the 25th. As soon as it does that, then your target should be that high of 620. Now, because you are prepared to add lower down, I'm also going to make a suggestion that if it goes above 616 by 1 penny, you might want to add just a little, like a trading position. And that trading position says the moment, if it's going to go higher, it breaks 621 to start leg C, that trading position could have a trailing stop. So now you've got two sets of things in your mind. One is just, it's money, I wouldn't say for fun, but it says that at this particular point, you're looking at chance of higher highs, but it has these crazy moves, so it could also plummet. You're trying to protect yourself on the downside. I'm going to suggest, just for now, I'm not going to talk about the downside, those other positions that you would have. I'm going to talk about only the upside. And I'm going to ask you to call me in about, today is Tuesday. Call me either Friday or Monday, and let's look at this together, because if it's starting to move up steadily, then I don't think I want you to even put those things at the bottom, because I would rather have a stop higher up and not be stuck with something going back down to the 3s or the 2s. Hope that helps you.
Thank you.
Thank you, Bill. Thanks for calling. We'll be back with Travis, Stephen Garrow straight after this. Dow's now up 48, S&P's up 11.11.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We are back. Dow's up 54, S&P's up 11.89, and we're going to go to our next caller. We've got Travis in St. Louis. Hi, Travis. How are you?
I'm doing great. Good morning.
Good morning.
Hey, man, I just wanted to say, I don't know if you remember last time I called in about Deckers.
Yes, you got the options, right? You got the calls.
I closed them this morning, my man, in a peak D in the daily.
A possible doji peak D in the daily. Well, we don't know if it's a peak D, but it's a leg D in the daily.
Yeah, leg D. Yeah.
And that's what we were waiting for, and congratulations. What a nice trade.
Just
Bravo.
a monster trade, yeah.
Fabulous.
Thanks for your help on that, by the way.
My pleasure.
And then secondly, before we get to Tesla, I know I want to look at Tesla because I think there may be an opportunity here too, but I want to get your thoughts on it. First thing was, on the S&P real quick, just take a moment, maybe 60 seconds. I know we're in a peak, or we're in a leg D in the monthly chart.
Yes.
Are you kind of thinking that once we come off this peak D, whether it's in this month or November or whenever it decides to form, are you thinking that we go down sharply and then maybe a 10, 15, 20% decline that really scares everybody, and then we rally back to get one more final high to make a leg E? Is that kind of what you're thinking right now?
That's my thinking, yes. And then we go to E and probably a leg F in the monthly.
Oh, you're thinking F. Okay.
Yeah, I'm thinking everything about this says slowly but surely money is going to go from bonds and gold into the... I'm busy banging my fist here. Gold into the stock market. It never fails. I don't see why it should fail this time when this is the biggest mega bull market we've had in decades and decades. So yes, that's what I'm thinking of. So,
well, I was just curious. I was just really curious what you were thinking on your technicals. Because I really put a lot of credibility in the Chapman way. So I always compare it to what I'm looking at on the fundamentals, and I'm just seeing some things that are starting to make me concerned looking out, because I'm seeing some things that are similar to 07 whenever we started to top there. So I'm just kind of get your thoughts on that.
Yep, that's the way I'm looking at it. Things can change, but right now that's the way I'm looking at it. It tells me that the volatility index probably later in November, late November, maybe December sometime. That's when we might get a big sell-off, another sell-off, and that might be a deeper sell-off. So I'm just... you know what I do? I go step by step. Those are my thoughts, but I look at the technicals, and the technicals are what we want to trade. So you want to? So the S&P, yes. So now the question that you had is why on Tesla?
Yes, Tesla. Is Tesla shortable here? I'm kind of looking at possibly. Is this a possible peak D that we're looking at in the daily?
It's a possible peak D, but the stochastic is at 96%. To short a stock when it's at 96% means that you need absolute perfection. Why? Because it means just like the VIX, very, very low in the 13s and 12s, it demonstrates buying pressure. So does the stochastic holding. Although every textbook will say at 96% it's overbought, I say no, that's what you want. You want it to hold 96 forever. You wanted to just look at how long Tesla's held in the 90s, and it's at 95.75 in the weekly chart, and this goes all the way back to 96 in the slow moving average, way back in July the 12th of this year. So it's just, that's what you want to see. Now, when it comes to shorting, two things. I would just check to see what the short interest is, only for one reason. I'm never afraid to short stock that's got a high short interest, except you have to do it. You really have to do it well, and you have to grab profits and keep coming back, because every time there's a pop-up, this is the first one to have a very big move up to really squeeze the shorts. So you want to have a target price on the downside and know that on the first round, you know what, this is not the one that's going to hit it perfectly, and then after that everything pulls back. This is the one that says it's the first attempt. And what you'd want to see is a test of the 185 9-period exponential moving average. I suspect you've got another 2-3 days to go on Tesla as it sort of flurries up to the 199, maybe. I don't know if it'll touch 200 as the 192.31, but it would not surprise me to get real close to 200, 196 to 199, maybe 202. And right at that moment when everyone's talking about Tesla at 200 and saying, oh my God, I could have bought it at 25 or 30 or 40 or 45, and now it's 200. I've just got to get in. That's the time it becomes vulnerable. So I'm actually looking at Tesla now, and I'm starting to see things. For instance, I don't know if I mentioned this before. I've seen enough of them on the road. When I looked at it in the showroom, it was one thing. Now that I see them on the road, they're actually a little bit ordinary. They're not as snappy as a Maserati or or Ferrari. They're really nice looking cars, but I'm disappointed at the back. I don't like the T sign. This is my own personal opinion. That T could have been way, way smarter and more sophisticated. So those are personal things. I'm looking at Tesla as a potential short, but don't get carried away right now. You can start, if you want to start a position, maybe at the close today. If this market sells off into the close, that might be a time. But just start a little position. You're going to be doing this a few times. Hope that helps you.
I was just thinking about firing away at maybe a few put options for maybe on the weekly here and see if we get a day or two pullback before it rallies to that 199.
That would be a good experiment at the actual technique, because that's the only way you really get to understand how these things work. When you actually do it, I've got peak A, B, leg C in the 120-minute chart. I'd hold off a tad. Let it get to a D. Oh, this is a 10-minute. Sorry, this is the 10-minute chart. 120-minute chart is, peak F. Well, I'm looking at this and I'm saying a good idea to just nibble, get a feel for this, and at a certain point you're just going to know when to nail it.
Right. Okay, good, man.
Thank you so much for calling, Travis. Always like to hear from you. We were looking at Tesla.
Thanks, man.
Thank you very much. TSLA is the symbol, trading at 192.50, down 87 cents. Looks like it's really close to pulling back for the first time quite sharply, and then we'll have to go from there. Let's go to our next caller. We got, Stephen Orlando wanted to know about the NYA, and then got cut off. NYA, the NYA is lagging, and that's way over 2,000 stocks, and it's a potential peak D if there's no new high in the monthly. You know what I'm going to do, Steve? All I want to say is it's got a nice bounce at this particular point. It's at 9,701. If the New York Stock Exchange can climb above 9,756, then I'm going to say, we've got more of a rally to come. But at this particular point, I'm just treating it as a counter-trend rally. I will spend a little more time on it maybe tomorrow. I'll write it down for tomorrow, for Wednesday, and we'll look at it together Wednesday. I want to see how it closes today in any case. NYA. So let's go to Garrow in Newport Beach. Hi, Garrow. How are you?
How are you, sir?
Very well, thank you.
I don't want to take too much of your time. Regarding Z,
yes.
I'm looking at the weekly chart. I always use that sharp parabolic.
Yep.
That is my very important indicator. Today it gave me the first dot at the top, and from there on all the way down to 21-day moving average, it's $75. You think it is a good time to short it from here to $75 or not?
We're looking at Zillow?
Yes, sir.
Yeah. So, okay. So yesterday, yesterday, Raskoff, the CEO, was interviewed by Kramer. I didn't actually listen to very much, just a real quick thing. And he said that the shorts have a misconception about the stock. It is really the agents that spend so much money on Zillow. And I'm looking at it and I'm saying, hey, you've got that exact double top pattern, the H pattern that in my CD right here, I just happen to have it. The drop bucket pattern is the double top pattern that says, be real careful, because if you take out half from the top to the cup bottom, you're going to test the low. If you take out the low, you can go 1-to-1 to the downside. Well, Zillow's done exactly that. It's done more than 1-to-1, and it's back to the testing area of the low of 79.99 back on the 20th of August. So are you looking to trade it long, or you're looking just to wait to short it?
I want to short it, sir.
Okay. Now, this is what I'd be looking at. It's a nice turnaround candle today, but the stochastic is at 11%. It says to me a lot more work needs to be done to rally successfully. And the MACD, the moving average convergence divergence in the daily chart, for those of you looking at my chart in Tiger TV, this is what I'm looking at. See the width between the red line and the green line? The red line is a slow-moving average. The green line is a fast-moving average, and it hasn't flattened out yet. I'm suggesting to you, and it might also be based on the home builders. I'm doing quite a bit of work now on the home builders. But what I think is happening here is that I probably have a peak E in the monthly. I have a peak F in the 103 round number high, all-time high, says that's going to be a key ingredient later on when it does finally rally more successfully. But that's a peak F in the weekly. Stochastic has turned down at 77%, but the week is just young. It's just barely begun. Right. And the MACD is only now turning down, but it has every indication that it's going to go lower. I think you're right. Just between you and me and the listeners, I think Zillow is they have a fabulous product, but at the same time, there's something going on that I think is in the chart, and the chart says it's going to need time. It's gotten away from itself on the upside. Something to do with the housing market, something to do with slowing down in the housing market. I have no idea. But Zillow is saying, unless it can get back into the 95 area, it should rally. The rally could take it, depending on the market conditions, but the rally could take it to 88.49. Now, what's really interesting about this, that's where the slow-moving average, so the faster-moving average that you can see on the chart, the little red line, will cross under the black line and say, okay, now you got a little bit of a lift-off. But if 89.50 is not taken out, I would say by, today is Tuesday, I'd even put it by Thursday to Monday of next week. In other words, it does rally, but it just can't get above 87.23. It's at 85.20 right now. It's up $1. Z is the symbol, folks, trading at 85.30 now. What I'm looking at is there is a chance that it could make a much larger in time cup formation. But if it was going to fail, what would you do if it closes today at 84.20 or 83.90 and then gaps down tomorrow? So then you probably would have lost the trade because you would prefer to get it on a bounce, right?
No, if it drops tomorrow, I'll go get another stock. There are 6,000 other stocks.
That's okay. That's exactly what I wanted to hear. So here's my thinking, Garo. I would hold off on this stock. The best opportunity is to get it between 88.20 and 89.30 with maybe a $2. I know that you're prepared to start off with a little bit wider stop and then you tighten it. So I would have a $2 stop on that buy stop, and I would shrink that immediately if it started to pull back. Why? Because the weekly says any rally failure should start to accelerate and get this thing down to the 78, 77 level.
Very good. Very good.
So that's my reasoning.
I wrote it down, everything, and I'm going to watch it, and then I'll be back probably next Monday, sir.
Great. Looking forward to hearing from you, Garo. Thank you so much for calling, Garo. Newport Beach.
Thank you, sir.
Looking to short Zillow. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Basil. Hey, Basil, I bought CRM a few days before the earnings back in September.
Yes. So you bought it at about 40. Did you buy it at about 49-ish?
No. Before the earnings, before the gap up.
Way before. Okay, very good. Yes.
And then I got a nice gain, and I'm trying to take off the money that I made on it, and I'm trying to buy a $55 call for November. What do you think? Just use half of the gain to buy the call.
I've spent some time on this, and I always have to chuckle to myself. I have a friend. I've discussed this with him only once. I see him periodically every month. We hardly ever talk stock market. But a long time ago, he said to me, "What do you think of CRM?" Salesforce.com. Well, it was just after one of those many interviews that Kramer had with Ben, whatever his name is, who owns the company, who runs the company, who's an unbelievable, how can I call it to be, let's see, an advocate of the company. I think that's the best way to put it. That's it, Mark Benioff. Thank you, Peek. So I pretty much knew why he was buying, why he bought it the next day, my friend. He's a retired physician, and I spoke to him only once to say it was acting very well, but it's getting a little toppy, and then I never said anything other than that, and that's the only time I've ever spoken to him about it. And he bought it way back. And I know that he's thinking, he's a very smart cookie, this guy. He sold all his stocks in beginning of 2000. So I note what he does. So when Alan said to me that he bought it, I put it on my register in my mind. I'll talk about it in a moment, and we'll be back.
Ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global has a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the opening call see the Chapman wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, we're back and we are looking at CRM, which is Salesforce.com for Freeman in Dallas, and Freeman has had a fabulous gain and he's looking to extend that into the weekly chart. Now let me do the weekly chart on CRM, which is trading at 52.65 up 74 cents. There's no other way I could count this. I've got a peak F-top in the weekly chart back in the week of 8th of August at 46.87. It pulls back and then has a right arm extension, spike to the upside. I call it a rogue wave. It's just this sudden news event that takes it to the high. It breaks to the high just barely above the previous high. This is such a typical thing for the rogue wave that I talk about in my CD introducing the Chapman wave methodology. The technicals were failing. It was just an emotional thing, news related. Pops up, goes to 47.58, and the bar that takes out the previous high also becomes the bar that fails considerably, and it goes in a peak G, plummets from 47.58 down to 35. What was it? 36.09. 36.09. Then starts. Now there's no other way I can count this. I've got this at a peak B, acting very well. Stochastics at 91%. MACD is still strong. I think you have a great eye for this stock, and you're going to do well. That's the way it's looking. Now, what needs to be to confirm it, I've got in the daily a peak C1, C2. It needs to break above 54.25 to get to a leg D. Sometimes the leg D actually recycles and becomes a brand new A, but I'm just going to go one step at a time. So Freeman, on the downside, I'd be a little bit careful if it suddenly started to break 50 as support. If it breaks 50, it's going to go back to that cluster pattern between 49 and 50, which is really important. Breaks that, you've got to expect that it's going to retest some part of the gap. But on the other side, if for whatever reason this market actually holds up over the next 3, 4, 5 days, I think this is a stock that will go to leg C about 54.25. And then, of course, it should still go to a D. The monthly chart is in leg E, but the MACD is at 85%. Stochastic is good. Only if it breaks 49.25, the 9-period exponential moving average support between, let me call it between 48 and 49.5. If it takes out that support, will this thing start to say, hey, I'm about to fail? Right now, I think you've got the right thing. Now, one thing I'm going to say to you is this. The premium that you get, if you got out now, that's close to the best premium you've had in this move on the upside, correct?
Yes.
Okay. So you wanted to take some of those profits and put a little bit in, see how the weekly will work out if it goes to a leg C. Is that correct or not?
Yes, that's correct. That's correct.
Okay. I see no problem in that. Even if it goes to a 54.20 and breaks out for leg D, you're in the right position, but now you've taken a huge chunk of the gains, and now even if you're not playing with the market's money, you're at least you've rewarded yourself for having the discipline. I like your plan. The only thing I will say about it is this: we're in this period of high nervousness, a high degree of nervousness. If CRM actually holds and doesn't break 50. With all the noise that's going on, that is fantastic action. If it starts to pull back with the market, say in the next day or two or later today or whatever, I'd say that's the one time. Taking the profits off is really good. How you place your next positions is going to be very important. So maybe you want, as you take one off, you immediately get at least a position in the call going out to November for a higher price. That's the way I would do it. And then maybe add the other whatever positions you want to put on. But I'd start the switch as you took your profits. Does that help?
Okay. That helps, brother.
Congratulations, and a fabulous trade. Bravo. Congratulations.
Thanks, brother.
So I never quite finished my story with Alan, who I think still has the stock, but that's not the point. The point is the CRM is acting very well. Folks, I'll be back with Tom O'Brien this afternoon for an interview at about 4:20. Otherwise, I'll see you tomorrow. Please, if you're interested in my opening call, go to the front page of TFNN and check it out. All the techniques we talk about, I teach as we move along in the opening call for all the stocks we have, whatever positions, and the Dow itself. Thanks for being happy.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.